Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge, we are covering the financial knowledge and the banking awareness part of it. And basically, we had started the Banking Regulation Act 1949 and we are discussing in depth about various provisions enumerated within this act. Okay? And in the previous lecture, we had done with the branch expansion provisions. All right. So basically, in this lecture, we are going to start with the control over management provisions enumerated under the Banking Regulation Act 1949. Okay, Banking Regulation Act 1949. Under this act, what are the provisions over the control over management? But first of all, we have to understand the term management. Then only we will able to understand the concept. So first, if I'm ask you what is the meaning of management, so how you will describe it to me. Okay, it's just a simple question and it's just having a simple answer. Okay, so basically, in the general definition, we could say all the acts and efforts performed for managing different things to achieve a particular target is known as management. All right. So management in general terms is just acts and the efforts performing by any person to manage the things together in achieving of the target. All right. It's like, for example, suppose right now if you are focusing on the any competitive exams and you have to deal with your study, you have to deal with your personal life. Okay. And if you are a employed person and if you are working for something else, that you have to maintain your professional life as well. Okay, this is just an example. So you have to deal with these broad terms, and in these broad terms there are so many sub terms. Like in your studies, you having your schooling studies, college studies, your competitive exam studies. In personal life, you have your various things like your family, your girlfriend, whatever you have. Okay, about your professional life, you have to maintain your professional life at your office, at any place. Okay, so these are the things and the different things you have to deal with them. Okay, for achieving the goal. In such cases, the goal is cracking the exam. Okay, this is your goal. All right. So whatever the acts and whatever the efforts you are making is known as the management. Okay, I hope you have gotten clear cut idea. All right. And basically, then what is the manager? So the manager is a person who maintains or manages different things, is called manager. All right. So now I hope you have got an idea of manager and the management. All right. So now let's talk about the banks, because we are discussing about the bank. So do the banks also have the management? If they having the management, then why do they need it? What are their targets? What are their efforts? We have to understand them. So basically, in a broad term or in a common term, we could say bank generally having two main works: accept deposits, making investments, and loans. All right. These are the two main works they have to manage. And even if we go further down in this kind of things, it means like the first one is accepting deposits. If we go inside of these things, then what kind of deposit? Like the saving account deposit, current account deposit, okay, like the time deposit, all right, like the cash certificates, and so on. Similarly, if we're talking about making loans or investment, then what kind of loan? Personal loan, okay, educational loan, all right, car loan, home loan. So various kind of loans, and these particular loans and these particular accounts having their expertise team. Okay, so there are many teams, there are many people working with the bank for these things. All right, and even if we try to cover them in a broader terms, then there are teams like a technical teams which are working for bank softwares, sales team, basically they are working to attract the customers, customer teams or customer care teams, you can say, basically they are working for the customers which are already existed. Finance team means which are maintaining the finance. Legal teams which is ensuring the bank is working as per the laws and whatever the provisions. Okay, thereafter there is a marketing team which is making different campaigns for the promotional activities. So now you could understand a particular bank has so many operations, so many things. And what is their main goal? The main goal is making profit. Okay, which is very simple. Like on deposit, they have to give the less interest, and on loans, they have to earn more interest. So the remaining part, which is 4% in such cases, is known as the profit. Okay, but in a broader term, just doing this kind of thing is much harder than it seems. Okay, that's why a bank has to manage all the things together. They has to manage all these teams together. Okay, they have to take care of all these things like the accounts and all the accounts. Okay, they have to you can say hire so many managers to manage the things. They have to ensure the management, like all the acts and efforts should be performed according to the target which is to be achieved. Okay, that is the core management in the banks. All right, so the questions is not only about the growth of the bank, but also about two main things: growth of the economy, second, care of the customers. So if the banks grow, it means the currency flow, the investments flow will be grow higher. So the economy will grow, and the customers who are getting the services or who are using the banks will be saved. All right. So that's why it is very important that the bank's management should be in the right hand and should be accordance, or you can say, or should be in accordance with the current scenarios. Then only the bank would be rising up and all the things will be achieving. All right. So that's why the Banking Regulation Act having a various provisions regarding the control over management, like whosoever people are eligible to hold the control of the management. Okay, so that the banks would be flourished, and ultimately the economy as well as the customers will be protected and flourished. All right, so let's move forward. So first thing is the chairman of the board. Now, here is another thing which I would like to explain you. Okay. Many times you have listened two terms. Okay. And the two terms are, the first is the board of directors. Okay. The second term is chief executive officer, or in short CEO. All right. So now here the question is, are they same? And if not, what is the difference between them? This is the question. All right. So now let's understand it. So basically, if we talk about the director, so basically the director is a head or person who is maintaining the entire progress and working of the particular department. All right. Now you will ask me, department. What do I mean by department? So basically, any bank having various kind of department, like the sales department, finance department, okay, marketing department, all right, customer care department, all right, loan department, all right, legal department, tech department, and many other departments could the bank have. All right. So now all these department having their heads, which means all these department having their separate director who will take the responsibility of each and every employee working under his department. All right. And when we count all these directors together, then it is known as the board of directors. Okay. So right now, if we count the departments 1, 2, 3, 4, 5, 6, 7. So basically, when we counting all the directors together, so these 7 directors are known as the board of directors, or you can say the board of directors of that particular bank having the 7 members. All right. So now I hope you have got the understanding about the director and the board of director. All right. Thereafter, if we talk about the CEO, so the CEO is basically a person who is in charge of maintaining the day-to-day operations. Okay. So chief executive officer is basically, you can say, an employee who is the head of all the employees working in the company. Okay. And he is responsible to maintain the day-to-day operations. All right. So you can say the BOM or BOD, the board of directors, is basically the planning body. Okay. Because they belongs to the different departments under the bank. So basically they do their meetings known as the board meetings. Okay. In which they plans for the future. So that's why it is known as a planning body. Thereafter, they plan the long-term strategies. Like what are the goals a bank is required to achieve in the long term after 10 years, 20 years. All these kind of things are basically done by the BOD, and the members are generally appointed by the shareholders. All right, you can say the shareholders who have invested their money, they had their meetings known as the annual journal meeting. Like once in a year, all the shareholders of a company met together, all right, and all the balance sheet, like is the company making profit or suffering a loss, all this kind of information disclosed in front of the shareholders. Okay, then various things has been discussed and the votings happen. Okay, so in this kind of meetings known as the AGM or the annual general meetings, the shareholders vote for the directors. All right, and the directors who have been appointed by the shareholders in the AGM now will be the part of board of directors. Okay, so you can say the members are generally appointed by the shareholders. Okay, whereas if we talk about the CEO, then the CEO is basically appointed by the BOD, board of directors, and responsible to them, and could be removed by BOD. Okay, so the CEO is just an employee who's the head of every employee. Okay, he is appointed by the board of directors and he could be removed by the board of directors because he is responsible to them. He has to answer why the policies couldn't be implemented fully, why we couldn't achieve the target successfully. All these kind of things could be asked by the BOD from the CEO. Okay, whereas the director could be removed by the shareholders if he is not get the vote by the shareholders in the AGM. So now I hope you have got the difference between the CEO and the BOD, or in short you can say BOD is basically a planning body, makes a plan, and then responsible to shareholders. All right, this is the BOD, whereas CEO is head of employees, responsible for implementing the planning of BOD. Okay, and answerable to them. So BOD makes the plan and CEO implements the plan. Okay, clear? Now let's come to the topic again. The chairman of the board holds a critical leadership position and is responsible for overseeing the board's activities. This individual often sets the agenda, leads board meetings, and acts as a liaison between the board and the senior management. Okay, so basically you could say, if we talk about the BOD, board of directors, so I have just tell you basically like this one. A bank and a particular organization may have various departments and having their directors, and all their directors together is known as the board of directors. That's what I have told you. Okay, so in this scenario, the board of directors having how many members? 7 members or 7 directors appointed by the shareholders. And remember one thing also, there could be Integral directors, it means that they are already the part of the company. He could be from the founding members, promoters, and from the, you can say, senior employees. Whereas the board of directors could also having the external directors. Okay, who is not the part of the company but was appointed by the shareholders in the annual general meeting. Okay, so the board of directors could have two types of members: internal members and external members. Internal members are the part of the company. External members are basically the members who is not the part of the company but appointed by the shareholders to be presented in the board of directors. Okay, so if the board of directors having the 7 members, so the one member would be elected as a chairman, and he will be known as the chairman of the board. Now he has the responsibility to disclose all the decisions taken by the board to the company, to the employees, to the CEO, and as well as to the shareholders. Okay, and basically, suppose if this is the board of directors, so he work as a liaison between the between the shareholders. Okay, and similarly for the employees. But the CEO included in between. Okay, so this is the prime responsibility of the chairperson, and the board of directors chairperson could be removed by the shareholders and by the board itself, and he could also remove by his own resignation. All right, now the chairperson should have experience in governance, leadership, and decision making. It means that he must be experienced in handling of the bank operations. Why I'm saying this? Because as we had seen, there are total 7 departments. Okay, each department having their own comprehensive work to do. If the chairperson is incompetent in handling of the task, in understanding the leadership requirements, in govern the banks properly, then what will happen? Could you imagine? That person would not be able to direct the board meetings in a clear way. Okay, and when the board meetings will not be in a clear way, there will no complete policy which is to be followed. Okay, and this will create a chaos at the top management. Similar things will happen in the middle and the lower management, and the bank performance ultimately will be downgraded, which is not good for the bank, for the economy, as well as for the customer like me and you. All right, that's why it is very necessary that the chairman of the board should be experienced in governance, leadership, and the decision making. Okay, thereafter, directors qualification. Like we know, directors are basically appointed by the shareholders. Okay, like shareholders during the annual general meeting or AGM could appoint anyone to the director if they wanted. Yeah, it is true, but this is the half information. That's not the complete information. And if this not the complete information, then what is the complete information then? So basically, the BRA is basically presents some qualifications of the directors. Okay, like no doubt the members of the board of directors will be appointed by the shareholders, but the selected members must have some qualifications to be qualified as a director. Otherwise, the Reserve Bank of India will intervene in it. Okay, the requirement that at least 51% of the board members possess specialized knowledge or practical experience in specific areas is essential. For example, if the board of directors having total 7 members, all right, so as per the given provision of 51%, all right, uh, basically to be very honest, it is not possible to half the person in between. Okay, so we could say at least 4 members out of the 7 must be possess a specialized knowledge or the practical experience in specific areas essential, like they must be qualified for the important departments like the loan department, okay, like the deposit department, okay, like the legal department, like the financial department, like the sales department, okay, similar with the coordinating department. Now you will ask me, what is a coordinating department? Actually, I have just created it now. Okay. Basically, I'm just providing you an idea. Suppose if the bank has to coordinate with various things like foreign banks, domestic banks, like the Reserve Bank of India, like the government and various other entities. So the bank may have or may not have any coordinating department which is liable to coordinate with all these kind of agencies. Okay. So if the director of coordinating department by himself is not having a special knowledge and the practical experience in this kind of work, so can you think or can you imagine that he will be able to manage this department? No. So that's why it is required that the 50%, that the 51% of the members of board of directors must having the special knowledge or the practical experience. All right. This ensured that the board has a well-rounded skill set with expertise in various fields like the accounting, banking, law, and economics. Because these are inevitable departments of banks. Okay, like for some time we could have experiment with the sales department, marketing department, even with the coordinating department. But for accounting department, we could not take a risk because if the books of the bank, like their profit, their loss, their deposits, their current capital, their Tier 1, Tier 2 capital, all these things of accounting is not done in a proper manner, then the bank by itself will not able to create a clear picture. Even they will not be able to explain to the authorities like what they are doing. Okay, so that's why it is highly required that the accounting of the bank books should be done in a proper manner. Thereafter, the banking law, it means that all the provisions of BRA and other rules and regulations provided within the Indian banking governance, a director or the head of that department must have a practical experience and the special knowledge of this kind of things. Otherwise, he will not be able to deal with all these provisions properly. And economics, like whether the economy is going up or coming down, all kind of things. Okay. So students, basically in this lecture, we had discussed the two main things properly, and even we had discussed management, manager, and other kind of things. Okay. I hope that you have listened this lecture carefully, but I would like to request you kindly revise it very carefully. Okay. Otherwise, if you're not revising the things on the same day or in a quick time, then these things will be compiled up for the end. And in the end, when you will try to learn them, you won't be able to grasp the facts and figures properly. And I'm sorry, but you will suffer when you go for the examination. That's the hard truth I'm telling you right now. Okay. So with this note, let's end this lecture. I hope that you will revise this lecture properly before you come for next lecture. Okay. So finally end this lecture and thank you.